Hey everyone, welcome back to my channel. This is Chris from Smithy Fitness and Finance. I'm going to do a quick video today on how to trade commodity stocks. Now, commodity stocks are really volatile and they require a little bit of a different angle of attack than just a regular, tech stock or a consumer disposable stock, that sort of thing. So I've got some rules here, how to trade commodity stocks. When I say commodity stocks, I'm talking about silver, copper, gold, oil, gas, lumber, etc. So the thing about the commodities is that you can wake up one morning and something happened in China overnight and the commodity can either be up a lot or down a lot. And because of that, the volatility of the stocks is really high. And we want to capitalize on that volatility. It's not our enemy, it's our friend. In fact, I love the volatility. So as you can see here, I've circled volatile, and I've got 4 rules. Now these are for me. They probably work for you, but maybe not. Everybody's a little bit different. This works for me, and I've come up with these rules over many years of pain of trying to buy the commodity stocks. And we'll get into that a little bit more in a moment. So rule number 1 is always buy into weakness. Want to buy the stocks when they're weak, when something has happened overnight, and they're coming down, and I want to be adding. We always want to sell into strength. So likewise, you have a strong day, give them a little bit. This is important to keep your emotions under control. And that's number 3, is tame your emotions. So yesterday, which was February 22nd, I think today's the 23rd, was a very bullish day, a very positive day. All the silver stocks were up big, and I do like silver a lot. But I had to sell a little bit. I didn't sell a ton, but I did sell some of my First Majestic and a couple of the other silver stocks I own, just because it's the discipline. I've got to sell a little bit on those hot days. Now, as it turns out, today, tame your emotion, is a very negative day. All those stocks were down. The whole market was down. Tesla's being killed. Bitcoin's being hit pretty darn hard. So we have to take a step back and not get caught up in it in an, oh my God, what am I going to do kind of moment, but more of, oh my God, how can I take advantage of this? And that's when we want to be buying into weakness. So scaling in and out means to be buying a little bit at a time and to be selling a little bit at a time. And we'll have a better look at that right now as I'll draw a stock chart. So again, price and time. And we're buying the stock. We've got a stock that's in the second phase. And this is kind of how the commodities run. The commodity stocks run. They're really volatile. Sometimes you will get a big spike and they can go, these stocks can go 100, 200%. And other times you can get a big downfall when they can drop 30, 40, 50% in a week or two. I've seen it many, many times. And so I've learned that, with the Darvas system that I've talked about before, and, buying the breakout, buying here, with commodity stocks, that doesn't work as well. Really what I want to do is buy the commodity stocks on the reaction. So I might have bought a little bit here in stage 1, uranium stocks, oil, gas, they get so cheap when they're bad, okay? So I own a little bit here, but as it goes up, I'm going to be selling a little bit along the way. I'm going to reload here, maybe reload a lot if I really like it. Copper is really hot right now. There's some great copper stocks. I believe copper is going to go higher in the years ahead. And I want to own them. And yet, when they have their move, as they have the last few days, I've got to sell some. It's my discipline, even if it's not very much, even if it's 10%, 5% of my holding, 3% of a very big position. I've got to let some go so that I'm able to reload when it comes back off. And we never know how low it's going to go. So I can't shoot my wad and try to buy it all here. I've got to leave some room. And again, as it goes up, I've got to sell a little bit. We've had some big moves You can see in this one here. And the emotion of those days, everybody is bullish, everybody's positive, everybody's happy. It's going to the moon. You know, the silver squeeze is working. It's going to go to $100 in the next little while. And you really don't want to sell. In fact, you want to add. That's your emotion. But we can't do that. We have to control that emotion, be businesslike about this. Okay, everybody wants it. I'm going to give them a little bit. And then who knew we'd have a weekday today? And today is really quite weak. And it's like, oh my God, everybody wants to sell that was buying yesterday. So we've got to be in there and adding a little bit to the position. So commodities are quite a bit different. I mean, all stocks are volatile, and we talked about that in previous videos. But commodity stocks are in particularly volatile, and when they're hot, they are super hot, and when they're not, they're really not. So I'll give you one example. Kinross, which is a gold stock. Kinross is a big gold company, very big. They've just had a great quarter, but gold itself has been under a bit of pressure since July. I think gold topped in July at 2,080 or something, and it came down to 1,780, just a few days ago. And Kinross, the stock looks something like this, and now it's been doing this. So, we don't want to be buying it when it's really hot, okay? And again, this is when the pull is on, gold's going to $3,000, whatever. And now we've had 7 months or 6 months of the stock coming down. And the other day I started doing some buying. It had a little pop yesterday. I actually sold a little bit, and now it's back here again or close to it. And I'm looking to add. So they've got a very strong balance sheet. They've had great earnings. The outlook is good for increased production over the years. So I like to own the stock, but I have to follow the discipline. The trader's discipline is there was 4 rules. We got to buy into weakness, and no matter how much we love a stock, we got to give them a little bit into the strength, because it can change overnight. A plane can fly into a building. There can be a tsunami in Japan. There can be a new virus that comes out that locks things down. We just don't know what's in the future. So when the going is good, give them a little bit. As my dad used to say, a bird in the hand is better than 2 in the bush. And a bird in the hand is taking a little bit of profit rather than just counting your paper profits as we go along. All right, that's it. That's just a quick little video on how to trade the commodities. It's a great way to get wealthy, but you've got to game the system a little bit and take advantage of the swings. All right, guys, if this was useful, please hit the like and the subscribe button, and I look forward to seeing you in the next one.